All right. Left hand side, higher time frame. Right hand side, lower time frame. This is of the Dow. You can use any higher and lower time frame combination, but just make sure you use it because, in my opinion, to understand trend, like you need at least two time frames. I've seen too many times where what seems to be a trend is really nothing more than a correction. So, yeah, you use 15-minute and 60-minute daily and weekly, or tick-based time frames. It doesn't matter. Tick-based, tick frames. In any case, let's go over it. So the left-hand side is the high time frame, and this is the mini Dow. So let's try to understand what's going on here. Just the indicators at the bottom, you have wave volume, and you have other two indicators. One measures range, the other measures the progress in the closes. And then on the top, I have an indicator that basically is trying to identify accumulation distribution along with rallies, things like that. So let's go over this. So you see that, price rallies here. Price rallies here, has no fall through, comes back and starts consolidating. All right. Price over here consolidates and then breaks into a bear rally, 5-bar rally. So it gave a false rally. Then there was a shortening of the thrust, pulled back, started moving sideways into this range. This range was distribution. Now there's different types of distribution. You have like major distribution, you have intraday distribution, you have effort reward. This right here is just the this is a little bit different. Some may call this no, it looks like a hinge or whatever, but I've created this indicator to basically identify the end of a distribution. So this right here in the tightening in this area sets up the rally down. So I know that this is definitely some type of distribution. You could call it redistribution or something, but there's distribution here. Then it starts moving sideways here. Now, what is important about this sideways movement here is much more important than this. Why? Because it's occurring at a rally low. It occurs at a rally low. The sideways movement is actually absorbing the demand at the support area. You see it's tagging and hugging the side. What it's doing is it's absorbing any demand. Any long buyers here, they're out of they're being sold into. And as you can see, the red box here identifies distribution, and the reddish brown bar here identifies entry into the markdown phases. So now you have bang, that red bar, so price is going to mark down. Then it starts moving sideways, and again, continued markdown. So these areas, these hinges, which was the Wyckoff term before flags and pennants, are really little distribution, or we could call it minor distribution or whatever. But they're the contraction before the expansion. So it moves sideways and bang again. So what these are now setting up are awesome opportunities, because there's no way demand is just going to rip right through all these levels. It's not going to. These are all untested. So you have R2, R3, I guess R4 up here. So these levels of where these consolidation, expansion, consolidation, expansion, consolidation, expansion, None of them, well, I mean, they're about to get tested, but they will offer opportunities here, offer opportunities here, offer opportunities here. Awesome, awesome, awesome areas to look for shorts. Okay. Why? Because you're selling into an area of prior distribution. Here, here, and here. These are areas where there was distribution prior to markdown rallies. Okay, like over here, you had a distribution that led to a 5-bar rally, markdown. Then another redistribution that led to a 5-bar rally. Then another distribution that led to a 4-bar rally. Right? So price is not going to rip right through all of them. What price is going to attempt to do is go and test these areas, see if there's any demand there, and then one of two things: either absorb and go higher, or reject and go lower. That's what's gonna. That's what is likely. But there's let's see what is this? Let me see. There's business conference ANZ. I don't think that matters. Anyway, so these set up real resistance. This isn't that bullshit, you know, that line at the top and the bottom. You know, that's I don't know where that came from, but these are areas where price rejected and expansion occurred to the downside. So we're looking at these areas and going to short them. That's it. So right now, is there accumulation? I mean, yeah, accumulation does happen in a downtrend. It does happen. But understand what's really going on. In my mind, like what I've seen again and again is just you have this consolidation, for example, like one of these, right? That's distribution. It goes down. Then you have accumulation, right? But when you have accumulation in a downtrend, what it's doing is it's setting up a minor move to test this area, which is now, I think it's called ICE. But what happens is in this area you have redistribution and you go lower. This is really like this is what happens. So is this is the accumulation in a downtrend, this box and this box. Okay, it's accumulation in a downtrend, and their purpose, in my opinion, is to set up a temporary bounce and test areas of a breakdown where more sellers come in and it continues lower. And eventually what happens is you get really oversold. And when you get really oversold, then this accumulation, you know, instead of going down lower and forming one of these again, it absorbs and goes higher. All right. This is the basic model, though, of what really goes on in the market. Okay, and these areas are basically resistance and support. Now you could call them accumulation distribution, but this is distribution is resistance, accumulation is support, distribution is resistance, accumulation is support, distribution is resistance, but then there are times when that distribution isn't distribution, it's absorption. to break resistance and go higher. And when that happens, you have a change in trend, which leads to the opposite happening, where you have distribution up here, reaccumulation, right? Then it starts going higher. The waves start going higher, right? Until eventually it goes down here, it absorbs, and instead of bouncing, it goes, breaks, and then you have that same scenario. So this is what's really going on. At these different price levels, you have buyers and sellers. And what they're doing is they're accumulating and distributing, at different levels. Okay. Now, why would someone accumulate in a downtrend? Because the price is oversold. And when price is oversold, they will accumulate at those prices because they can bounce it back up and then sell again. Okay, so this is what I'm seeing in the market. And just to show you, like, this over here is the distribution. Well, this was the see where the green bar is? That was the accumulation. Goes up here. There's some selling here, but this is the distribution. It goes down, breaks, and in some cases you won't even get a rally. You just distribution, distribution, redistribution, and now I think you're getting some type of accumulation action here. Okay, and so what does this mean? Does it mean it's gonna become a super rally? No. What's gonna happen is, if this is distribution, right? If this is a bounce, it'll consolidate and go down, or it'll just bounce to a level, right? Maybe up here, R2 is untested, right? Maybe it'll do it here, or it can go higher, but somewhere these guys are going to come right back and say, I don't think so, and push it right back down. And if it's going to go lower, then it'll absorb this demand here and go lower. This is real market reality. This is not no internet diagram. Okay, the idea is that these strong hands at different levels, they accumulate and they distribute, and then they rally, which is same thing as saying consolidation and then expansion. What's going on in that consolidation? In this case, distribution, expansion, distribution, expansion, distribution, expansion. In that distribution, redistribution, redistribution, or instead of expansion, it's really, the term is markdown. So you have distribution, markdown, redistribution, markdown, redistribution, markdown, finally some accumulation. Now over here is this absorption, or going to be redistribution. We don't know yet. We wait for the markup or the markdown, and then you just sell its test. That's it. Just sell its test, because accumulation and distribution represent support and resistance, and they are definitely edges in the market, in all markets and in all time frames. Okay, those are the real support and resistance levels in these markets that can be traded. Now there are other behaviors too, like springs and upthrusts, like Someone may say, oh, and that's fine. If you want to view markets in that perspective, then for sure over here, you know, this is an example of a spring at this level that had follow through, right? I mean, it's like a spring in a downtrend, so I don't want to harp on it too much. But this is a spring that has good follow through. Look at that. You have a good bar here. Then you have 1, 2, 3 bars close right back in the range and thrust. That has follow through, right? And you can also say that that spring has been tested, and since it has been tested, ooh, it's ready to mark up. Yeah, I mean, I can see that argument. But note that this spring is in a downtrend, and if it does go up, there are sellers waiting at all of these levels that are ready to, really, really just take advantage, because these guys on these higher time frames, they didn't get an opportunity. They did not get a retest opportunity. So they're waiting over here. They're waiting over here. They're waiting over there. They did not. You see, like, it went and it redistributed, and it never tested. It just continued, redistributed, continued, marked down, but never went up back into those ranges. If it goes back into those ranges, what do you think they're going to do? They're going to sell, sell, sell. So the levels that I'm looking at, 23,949, we want to see what happens in that area to see if it gets taken out, like, not 20, basically this range right here, where it says break is 2428. See if that level, and then after that, it's right up here, R3, 24180. Watch what happens when it goes there. That's all I gotta say. 24180, around that area. Watch what happens. They're going to. This is like why this is a much stronger level is because they're not only sellers here. It's not only sellers at this level, but all these guys are trapped. All these guys that were at the former support level right here, they all want to get the hell out. So they're all trapped here. So the pressure is gonna come from two sides. The sellers that are gonna be selling the retests. Well, first is the original sellers who want to add to their position. Then there are new sellers that want to sell the retest, right? That want to jump on board, that are pullback traders. And third are trap buyers that, bought the pullback here and were absorbed. So this R3 level, 24180, when price gets there, it's not going to be easy to absorb all three parties. So there will very likely be a reaction at that 24180 on the Dow. And it may happen tomorrow. So just watch the level. You'll see what happens. Anyway, so lower time frame, where are the opportunities today? Man, I hate these big trends. It's like, where do you start? So this was the opportunity right here. Like, you know, you don't have to be a rocket scientist to see this, right? Red, 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 red. It's saying sell, 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 sell. Okay, so you have an 8-bar rally. 8-bar rally. Okay. This distribution, price gets in here, you don't think too hard, just sell. Okay, look at the pressure that came from here. Look at the selling pressure. Isn't this an edge? Obviously, it's an edge to sell. Look at this. Green, some red, green, some red, green, a little more red, green, red, green. Bang! That's saying game over. That's what it's saying. That's what you call a real sign of weakness. All right? Look, in the whole trend, this was the initial, right? Bang, 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 bang. This was the little trend they had up here. And there's the distribution in here. Actually, a whole range of distribution. I call, this is the edge of it. And then bang. All right, now what we do, when it gets back in here, basically that's what the white lines are for. I mean, sell in the middle. Sell in the middle of this. All right, so it creates a zone. It goes in the middle. Selling pressure comes in right there. Right? Selling, react, come up here, and that's where you get pressure. Bang, 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 bang. Okay? And which one's at the indicator catch? Like then this area right here. This area right here was the trade. Because this wasn't an easy sell. Right? Because what they did was they ran, like if you sold the bottom level, because and then there was a thrust, they would have stopped you out, because they do this on purpose. Like this was designed to do a stop run over these guys, in my opinion. Over here you have a very nice trade. You have a consolidation. This is really redistribution in this area, right? And the white lines set up the zone. So look at the pressure that comes. 1, 2, 3, 4, 5. That's good selling pressure. Real good selling pressure. So, there's some buying pressure as well, but it's in a downtrend. And like I explained, the model that I have in my mind is that, there's distribution, there's some markdown, and they're gonna go back on here, and they're gonna sell some more. And remember, there's also some accumulation here. Okay, because it gets oversold. What are they gonna do? Right? And then I'm gonna mark it down some more. Okay? So now you can see this. This is this selling pressure. What happens is it goes down. This is where they accumulate some. Right there. You could tell even here, green, 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 green. And they go back up here. So now instead of selling here, as soon as it tagged this area, they just sold it. Red, 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 red. So this was the redistribution, accumulation, test, sell. So redistribution, accumulation, a downtrend that is setting up the test. Test happens, and it doesn't redistribute here. Instead, it just pukes, right? Then it bounces, then it comes back here, and there's actually some, they're holding price here. So I think there's some redistribution here as well, as evidenced by this red bar. And it goes down. Okay. All of this action is like funny action. All it's doing is testing this area. All right. Same here. The red bar, they were doing something over here. And this is a strong rally. And now you got to be really careful, because look at the selling pressure. It's decreasing. And buying pressure is coming in. Selling pressure decreasing, diverging, or whatever you want to call it. Buying pressure coming in. So now you gotta be a little back off, And then you have more buying pressure, and selling pressure is decreasing. Buying pressure is coming in. So at this level here, buyers come back in. Some selling doesn't do any damage, doesn't break the pivot low, Buying still coming in. So they're buying here on a wider base of accumulation. This is their first evidence of accumulation right here. This wave. Second is this wave. This is much bigger accumulation. It's not like those little hinges I showed. This is buying. More buying. More buying. And now they're finishing up their campaign and ready to break out. And this what that is. You know, this accumulated, this accumulated, this accumulated. All this did was pull back a little, right? And they're ready to go. And this is now in markup. So this prices in markup cannot short this. Okay, you want to wait until this accumulation rallies. Wait until it gets into these areas, and then see how it reacts. If it's reacting, if it's not reacting like in the way it should, then it can absorb and go higher to R2. All right. So as this is moving up, you don't just sell into strength. I don't believe in selling into strength or climaxes. All right. That's how a lot of people got nailed in this bull market. Keep trying to sell overbought when there was no such thing. Anyway, so price is rallying. You got to wait until it gets into these levels, and then it has to break, and then you sell the test. So now it's in markup. It's DNT. Do not touch. Do not sell. Do not do anything. In fact, any pullbacks are probably a buy to go higher. Any pullbacks will probably be a buy to go higher until pressure comes in. Selling pressure comes in. All right, I'm done.